The investment community was caught off guard a few days ago. The Daily Journal Corporation, a newspaper and software business whose stock portfolio is managed by Charlie Munger himself, cut its stake in the Chinese internet business Alibaba in half. According to a form filed with the Securities and Exchange Commission, Charlie Munger sold 302,000 Alibaba shares that are currently worth around $30 million. Charlie Munger himself, he declined to comment on the sale of Alibaba's stock, so we can only speculate what led him to that decision. So this is what we will do in this video, and I will actually present 5 possible explanations. And so without further ado, let's get started. Alright, hey there, my name is Daniel Solomon and I've been covering Charlie Munger's investing activity and specifically his investments in Alibaba for quite a while now on this YouTube channel. But if you didn't already know, Charlie Munger is better known as the vice chairman of Berkshire Hathaway, and so he's a long-term friend and partner of Warren Buffett. And both Buffett and Munger are known to be long-term investors. Both believe in a buy and hold strategy that allows them to gradually accumulate more shares of great companies over time, regardless of the short-term performance of the underlying security. So considering that their favorite holding period is supposed to be forever, Charlie Munger has actually been quite actively trading Alibaba's stock. Let me just give you a short overview of when exactly he bought and sold Alibaba stock. Well, he started accumulating Alibaba shares in Q1 of 2021. Back then he bought 165,000 shares and he presumably paid around $220 to $250 per share. Munger then basically doubled his position in Q3 of last year, adding another 136,000 shares to the already existing position. And then in the last quarter of 2021, he doubled down on this idea again, buying another 300,000 shares. Now last Tuesday, the Daily Journal Corporation announced that they sold around 50% of its shares in Alibaba, and I think it's fair to say that this was absolutely unexpected and caught everyone in the investing world by surprise. Because Charlie Munger has been unequivocally very bullish on Alibaba and also the Chinese economy in general. So what just happened? Well, let's consider the first possible explanation. But before I do that, please let me know in the comments down below what you think. Why did the Daily Journal Corporation sell its stake in Alibaba? Alright, so first of all, I would like to pose the question of whether we can really be sure that Charlie Munger actually sold 50% of the Alibaba shares. He might have very well converted some of the ADR shares into shares trading on the Hong Kong Stock Exchange. Citibank is the sponsor of the Alibaba ADRs. And to quote Citibank here, Hong Kong ordinary shares and New York Stock Exchange traded ADS will be fully fungible and will be able to be freely converted in both directions. The conversion process will generally be completed electronically within 2 Hong Kong or US business days. And there is actually data showing that the conversion of Alibaba's ADR shares into Hong Kong shares has picked up the pace. Data from the Hong Kong Stock Exchange, for instance, showed that back in November, 1.26 billion shares were converted from American ADRs to Hong Kong ordinary shares. However, what strikes me as odd is that Munger only converted half of the shares owned. Why would he not just convert 100% of the shares owned by the Daily Journal Corporation if he is worried about the delisting risk of Chinese ADRs? To me, this explanation doesn't make too much sense, to be honest. So let's move on to a second possible explanation. One very legitimate reason to sell a stock is if your investment thesis has changed or is broken. The story has changed, as Phil Town likes to put it. So this could include many things. Maybe there has been an adverse change in management. Maybe management has spent too much money on a flashy acquisition. Maybe there has been a major strategic shift and you don't like the direction the business is heading into now. Maybe there's a new strong competitor, just to name a few examples here. But to be honest, I don't think that's the case here. I mean, obviously, if you follow Alibaba's business, you will know that the last 2 to 3 quarters have been rather disappointing. But I don't think that over the last 7 to 8 weeks, anything has fundamentally changed. And Charlie Munger has actually very recently talked about China and Alibaba during the most recent Daily Journal shareholder meeting. And that meeting took place on February 16th, so just around 7 to 8 weeks ago. Let me just show you a short clip from that event.
The next question comes from Tom Seymour. He writes in January, Jeff Gundlach was quoted, "China is uninvestable, in my opinion, at this point. I've never invested in China long or short. Why is that? I don't trust the data. I don't trust the relationship between the United States and China anymore. I think that investments in China could be confiscated. I think there's a risk of that," end quote. Obviously, with a significant percentage of the Daily Journal's marketable securities invested in BYD and Alibaba, you feel differently. Please explain why you are right.
Well, of course, only the future knows who's going to be right. But China is a big modern nation. It's got this huge population and this huge modernity that's come in the last 30 years. And we invested some money in China because we could get more value in terms of the strength of the enterprise and the price of the security than we could get in the United States. Other people, including Sequoia, the leading venture capital firm in the United States, have made the same decision we have. But I'm sympathetic to Gundlach. If he's nervous, he doesn't have to join us. Different folks have different opinions. I feel about Russia the way he feels about China.
So in that short clip, again, this was recorded just a few weeks ago, he talks about the strength of the Chinese businesses he owns. And in fact, he seems to believe that he can get more business strength for the money he has to pay for the stake in these businesses compared to equivalent businesses in the United States. And to me, Charlie Munger doesn't seem worried about his Chinese investments at all. I think the only thing that has fundamentally changed since the Daily Journal meeting is that Russia invaded Ukraine. So maybe the immediate and united reaction of the West, the drastic sanctions imposed on Russia, maybe this is something that made him reassess the risk that comes with owning Chinese shares or Chinese equities. But again, I don't think that is particularly likely, and I'd even argue that actually some progress has been made when it comes to the relations between Chinese and US regulators, when it comes to possible audit inspections by the US and the legality of the VIE structures. I think the following tweet sums it up quite nicely. All right, let's take a look at a possible third explanation. Charlie Munger had been the Daily Journal chairman since 1977. And as I said before, he managed the stock portfolio and provided his investing expertise to the company. And in a way, the Daily Journal company can be considered kind of a mini Berkshire Hathaway. But recently, on March 28th, Charlie Munger, who's 98 years old now, he actually stepped down as chairman. And that's not the only change that happened on a management level. The company also announced several other management changes, including the retirement of the CEO, Gerald Saltzman, and he will be replaced by a 46-year-old Canadian who was named new chairman and also interim CEO. So I see two more possible explanations here. First, maybe there was a power struggle between Charlie Munger and the board of directors at Daily Journal. Maybe the new CEO doesn't like the Alibaba investment idea, and maybe cutting the position by 50% was kind of a compromise here. I think the fact that pretty much exactly 50% of the shares were sold seems kind of odd. And so maybe this was a hint at the fact that it was rather a strategic decision. A similar explanation could be that Munger wanted the next manager to start with a clean sheet. Munger seems to be a very honorable person, and he might have realized that Alibaba is a very controversial investment position. And as I said, maybe not everyone in the Daily Journal management team agrees with Charlie Munger's view on China. And selling some of the shares was a way to decrease the, let's call it Alibaba risk that the Daily Journal Corporation carries. Another explanation could be that Charlie Munger was hit by a margin call. A margin call occurs when the value of securities in a brokerage account falls below a certain level, known as the maintenance margin, requiring the account holder to deposit additional cash or securities to meet the margin requirements. Yeah, and it is public knowledge that Charlie Munger used some margin debt to fund some of the Alibaba purchases he made for Daily Journal. If we just consider the balance sheet of Daily Journal, we can see that the investment margin account borrowings increased by $37 million over a 1-year period. So you could make the case that the value of the Alibaba shares that were now sold is actually suspiciously close to the margin loan amount. And if you consider that the average price paid by Munger is around, I think, $145-ish, and that in Q1 of 2022 the price of Alibaba at one point dropped below $80, you could see a margin call coming in. Now you could also argue that the new CEO simply didn't want the margin debt overhang on the balance sheet and instead wanted some extra liquidity for the software business of Daily Journal. Now one last reason for selling Alibaba shares could be tax loss harvesting. We all know that Charlie Munger likes to spend time with his friend Mohnish Pabrai, and Mohnish Pabrai himself, he said publicly that he actually sold his Alibaba stake for tax loss harvesting reasons. But at the end of the day, we kind of have to admit that the true answer to the question of this video is that nobody really knows. We can only speculate, and I would argue that nobody actually has any idea what is going on right now. Investors usually buy stocks for only one reason, to make money, but there are hundreds of reasons why they may sell or trim a position. But I think the Charlie Munger Alibaba story, however it may unfold in the next few quarters, may be a good reminder that just blindly copying some superstar investor without doing the actual research yourself is a pretty foolish idea. If the fact that Charlie Munger sold Alibaba makes you uncomfortable and changes your investment thesis, I think you should probably not have owned Alibaba shares in the first place. Personally, I'm fairly optimistic when it comes to the long-term performance of Chinese stocks. And I've actually talked about Chinese stocks and the associated risks in 2 other videos quite recently. So if you want to learn more about the risks, but also the opportunities of Chinese equities, just click on one of the 2 videos right here. Take care.